Hello and welcome. This is Business Incorporated on Channels Television. I'm Chimize Obi Iwago. On the program today, the IMF blames recent EndSARS protests in Nigeria on economic difficulties. President Kagame calls for acceleration of African Union reforms. And Zimbabwe's economy projected to grow 4.2% in 2021. We'll begin the show with intraday market numbers from Africa, which were in the positive territory. South Africa's JSE index jumped 1.20%, while the Nigerian's main index was marginally higher by 0.08%. In Egypt, the EGX 30 ended the week negative on Thursday by 1%, while Kenya closed Thursday's session higher. And major markets in the Middle East ended the week mostly positive on Thursday. In the UAE, Dubai's main index gained the most by 0.66%, while the Abu Dhabi index added 0.29%. Elsewhere in the region, Saudi Arabia's index closed marginally higher by 0.01%. Only the Qatari index ended the week negative by 0.07%. And European markets advanced on Friday morning as investors monitored signs of progress towards the U.S. stimulus deal and the continuing resurgence of the coronavirus. Let's bring in Chelsea Dulani now to tell us more. Hello, Chelsea. Good afternoon. Well, data released this Friday showed that the new wave of coronavirus cases and lockdown measures are weighing on the French and German economies. Walk us through these reports.
So these reports are from IHS Markit. It's a very closely watched indicator of economic activity around the world. And what they've shown is that this second wave that we're seeing is definitely starting to bite the economic recovery that we had seen earlier in the summer. For the broader Eurozone, we saw the measure of business activity fall back into contraction territory. So it fell below 50 for the first time in 4 months. That indicates that the economy, that the Eurozone economy is starting to contract again. And if you look at specific countries, France was hit particularly hard in their services sector. France is seeing a very significant increase in coronavirus cases. They put many cities on curfew, including Paris, and are having to consider more severe restrictions as they battle this new wave of infections. So that certainly has weighed on their economy. Germany is doing still a little bit better. They still are seeing a decline in service sector activity, and that, of course, is due to things like restrictions on restaurants, on bars, on all sorts of public activity. But we still are seeing a very strong resurgence in the manufacturing side of the economy. We've seen exports here in Germany really booming over the past couple of months, and that's due in part to a much better economic situation in China. So German manufacturers, German car makers are all really benefiting from the strength in the Chinese economy. But at the same time, the broad picture for the European economy is starting to look darker and darker. It likely will see a return to recession in the fourth quarter, as many people had expected the economy to continue to rebound throughout the rest of the year and through next year. Now it looks like many Eurozone economies, if not all, will contract in the fourth quarter due to this next wave of viruses.
Meanwhile, the German government is planning new support for the economy, including for the hard-hit tourism sector. How have investors reacted to this?
For investors, it's definitely a bit comforting to see the German government being quite responsive to the economic outlook and to this new wave of cases that we're seeing here in Germany as well. What the German government has said so far is that they are planning some so-called bridging aid. So this could be support to the tourism industry, which has been hit very hard, or also to the catering industry, some of these areas that have just had their businesses completely wiped out by the virus and these new restrictions. Now that it looks like we will see more of these restrictions in place for the next couple of months, there's obviously a need for businesses that were already on very weak footing to have more support. The government is also looking at extending other economic aid packages that had been in place and were supposed to expire at the end of the year. That would be some things like help for entrepreneurs, people who are freelancers who may not qualify for other types of government aid. But this also is going to put a lot more pressure on the European Central Bank, which is meeting next week. Now that we are seeing these economies slow, now that we are seeing restrictions, there's also an expectation that we will see more support from the central banking level as well.
And bankrupt payments provider Wirecard has reached a deal to sell off its North American business. How is the unwinding of the company going?
It's definitely progressing, and the deal to sell off the North American business is a big step because that was seen as one of the most valuable subsidiaries within the Wirecard umbrella. Wirecard already has struck some deals to sell off other businesses. For example, its UK business has been sold. It's also reached a deal for its Romanian business. It's auctioning off some Asian businesses. So they are making progress, and some of these businesses are quite valuable, especially ones like the business in the United States that it had bought from Citigroup. It was a business that focused on issuing prepaid credit cards that you could get, for example, for something like a Starbucks or a gas station. That is an area where there's still a lot of interest. They are also still trying to sell the main business here in Europe, the Wirecard Bank that's based in Germany. They have had interest in that business, but it is taking a little bit longer to sort of figure out what the next step is for that. And at the same time, Wirecard owes its creditors more than 3 billion euros. Its assets are only expected to be valued at around 500 or even lower million euros. So there's clearly going to be a long line of creditors who want these sales completed quickly, but also many people who likely will not get their money back because of the fraud and because of the implosion of this company.
Thank you very much, Chelsea, for your time this week. It's been a wonderful week. Enjoy the rest of the weekend. And in the UK, the PMI data out today shows the UK economy is slowing this month as tighter COVID-19 restrictions hit travel, leisure and hospitality companies. Let's hear more from Juliana. Good afternoon, Juliana. Good to talk to you again. Well, we talked about the retail sales in the morning, and now the PMI is out and it's showing a slowdown. But is it all gloom? How are the markets reacting?
Well, the markets are doing well at intraday, and that's really because of banking. But yes, we have had this flash PMI data for October. This is really what gives people a sense of how the private sector is doing, and it's not doing that great. Still pretty high because, of course, anything above 50 shows that an economy is expanding. Below that shows contraction. It's actually come in, the flash data, at 52.9 in October. That's the lowest it's been in 4 months, and much lower than the 56.5 that was recorded in September. It really shows that there's been a lack of buoyant activity in the services sector, and economists are putting that down to the new restrictions. We saw a 10 p.m. curfew come in, I believe, just at the end of September, and of course this has had a knock-on effect on hospitality, and also the rule of 6, as well as people only being able to eat and drink in bars if you have table service. So this is really having a negative effect. And then we had some positive data in the morning. That was from the retail sector, showing that retail is much more buoyant, 5.5% higher than it was in pre-pandemic terms. But the unfortunate thing is next week does show the end of the furlough scheme, which has been much shouted about and applauded from across the world. It is coming to an end, and we are expecting mass redundancies. I think the Bank of England has put it up to about 7.5%. At the moment, we're on about 4.1%. That's likely to massively increase at the end of next week. And of course, if you don't have a job, you're not going to be buying. So it does appear as if the economic recovery in Britain is slowing down as we get to those harsh winter months. So at intraday, the FTSE All-Share is up 1.39%, the FTSE 100 is up by 1.47%, and the FTSE 250 is up by 1.02%. In currencies, the British pound is down on the US dollar by 0.06%, down on the euro by 0.29%, and down on the Japanese yen by 0.26%. It's worth mentioning, Chimmy, as soon as those PMI data was up, sterling fell.
And in corporate news, Barclays has warned of potential cost cuts as the economic fallout from the COVID-19 pandemic pushed its total bad debt provisions to about £4.3 billion. How come they have reported better than expected third quarter results?
Well, the reason why they've posted better third quarter results is because they've been doing particularly well, especially in their investment arm. The cost-cutting side is rather different. That's because of the 85,000 global workforce they have. About 55,000 are working from home, including thousands of people in the United Kingdom, and they have massive office space. So there are discussions on whether or not they can cut their overheads and keep people working from home. We know a lot of the big tech firms as well as big banks are considering that, especially because it just seems to be more economically viable. But I spoke about the FTSE and the fact that banks were leading the shares at intraday, and that's really the lead from Barclays. Their shares rose 7% this morning, and that's because they have announced a whopping profit result for Q3 2020. Their net profit came in at £611 million. That's more than double the analyst expectations of £270 million. Also, the impairment charge that you mentioned of £608 million, the impairment charges, of course, that's bad debt. They know they're not going to be paid back. Every bank is putting up their impairment charges at the moment because governments across the world, particularly in the West, G5, G7 nations, have given out so much money. And we've heard from the Bank of England, not all of that can be paid back. So they've put aside £608 million, which brings their total impairment charges for the 9 months to September at a whopping £4.3 billion. However, this last impairment charge that they've put in of 608 million is much lower than analyst expectations of 1 billion, which is why, like I said, they were leading the FTSE risers this morning at a 7% share increase.
And we talked about Brexit in the morning, and now Britain and Japan have formally signed a trade agreement making the UK's first big post-Brexit deal. What reactions are you getting on this?
Muted reaction, lots of pomp and ceremony, of course. Yes, Liz Truss, the International Trade Secretary, she is in Tokyo and she signed that deal, the deal that allegedly will bring £15.2 billion of investment into the UK. But I think the reason why it's muted is because when it was first announced last month, I think it was very quickly realised that this is basically the same agreement they have already under the EU relationship with Japan. So there doesn't seem to be any different, but of course it's still important. It's still a milestone, and it is the first free trade deal that they've signed. And so really now what this means is that 99% of goods that are exported to Japan from the UK will be tariff-free, and that's of course the deal that Britain is currently negotiating with the EU. They want that also with their biggest trading partners, which is the EU, and those discussions are ongoing. But yes, it's all been signed and sealed now, which of course is a great thing. But as I said, muted reaction here.
All right, thank you very much, Juliana. Well, we can say thank God it's Friday. Enjoy the rest of the weekend. And shares in Asia Pacific were mixed on Friday trade as investors monitored coronavirus developments. Mainland China stocks led losses among the region's major markets, with the Shanghai Composite closing 1.04% lower, while the Shenzhen component dropped to 1.99% on the day. Hong Kong's Hang Seng Index edged 0.46% higher. In Japan, the Nikkei 225 rose 0.18%, while the Topix Index advanced 0.34%. Meanwhile, shares in Australia slipped, with the S&P ASX 200 closing 0.11% lower. We'll take a break, and when we come back, we get reactions from the International Monetary Fund on the developments here in Nigeria. To stay with us. The International Monetary Fund says the recent EndSARS protest is due to economic difficulties in Nigeria, adding that living conditions in the country for the last 4 years have been very difficult in the wake of the decline in oil prices. According to the IMF's Director, African Department, Abebe Selesi, social unrest is not uncommon, but the government needs to do more to raise revenues to invest in key sectors that can create more job opportunities.
To say that, conditions, economic conditions in Nigeria, of course, for the last 4 years or so have been very difficult. In the wake of the decline in oil prices in 2015-16, since then, the growth has been quite anemic. There's been a lot of pressure on standards of living. So there has been this dislocation. As always, when you have these kind of economic difficulties, social protests are not uncommon. I think this is exactly why we've been, on the record in Nigeria about how really critical it is to get all of the policy-induced barriers out of the way to facilitate stronger economic growth, for the government to do more to raise revenues, to be, from non-oil resources, to be able to invest in health, education, which would allow people to be more successful at getting jobs, but also improve the economy's potential. So I think that development agenda that Nigeria has, has to be tackled with gusto and vigor, so that the millions of jobs that the country needs can be created. And I think that agenda remains very pressing.
And still on the EndSARS protest, let's see how the development in Nigeria is being viewed by people outside the country. And John Kennedy, a managing partner at Bespoke Business Consulting in Accra, Ghana, joins me now. Hello, John Kennedy. Thank you very much for joining us on the program.
Hi, good afternoon, and good afternoon to your viewers.
Good afternoon. Well, I'm sure you were following the trend here in Nigeria. Of course, you listened to a president address the nation yesterday. Watching from the outside, what was your perception of the president's speech?
In fact, you can see me in black with a stripe of red. We are actually mourning. It's a time where we have to look inward and see what the problem is with Great Vision Nigeria. In Ghana here, we have citizens who are disheartened, who are feeling, I'm actually looking for words or kind of sentence or a phrase to use to explain what's really happening in Nigeria. It is so bad, it's unsympathetic. And people are not really happy. The citizens are not happy. Even the Ghanaians who are supporting Nigeria are not happy. And they are so surprised that this kind of a thing can happen.
Now, on Wednesday, we know that about 150 people gathered outside the Nigerian High Commission in Accra. Most were from Nigeria, but they were supported by a handful of Ghanaian compatriots. So what was that driving force, for that support, for that show of support for Nigerians there?
Well, see, what is actually happening in Nigeria is something that also affects Ghana, maybe indirectly. Because there's a saying that if any war should happen in Nigeria, which we pray doesn't happen, if only 10 million of Nigerians should move down to Ghana, they will actually dilute Ghana and you will not be able to find Ghanaians in their own country. So they are very, very concerned. They are unhappy and they are it's so touching. It's so touching to see on social media, to see on TV on how things are happening over there. So Ghanaians have this feeling for us, and they're actually supporting us and making sure that we are okay here. They are advising us and trying to make sure things are going on for us in Ghana.
Now, speaking from the outside, what would be your advice for both the government and the youths of Nigeria?
The advice now to the government is for the government to put its pride aside and try as much as possible to regain the trust of its citizens. The most important thing right now is to understand what the youth want and provide that which they want and make sure they're happy. These are the most there are more of the youth in Nigeria, and this is supposed not to be the case at this point. Honestly, I'm feeling so bad, and I don't even know what to say, because when you look at these things, it's heartbreaking. It's heartbreaking because you see your people, they are unhappy. They are trying to tell you what their frustration is, and the government feel unsympathetic about it, bringing out policies that we are analysts. Let me tell you something, we are analysts, and this thing that they are planning, it is not going to work. It's not going to work. They are planning, is this 170 billion naira for over 10 years for 100 million youths? How can that help? In 1 year, how much are they giving them? How much are they budgeting for the National Senate? It is bad. You don't have the youth at heart. And this shouldn't be the case. We are trying to build a very good country. Look at how the protesters sat in there and tried to defend what they want. They didn't go out to do bad things. They are just there trying to protest and let you know that this is what they want and provide this for them. They are looking at President Buhari as the father of the nation. But this is not the case. What kind of country is this? You are outside the country and you are feeling so bad. You are not even able to tell people you are Nigerian. What kind of life is that? As you are finding it difficult over there in Nigeria, also finding it difficult here in Ghana, because you have to try as much as possible to defend yourself over here. You have to try as much as possible to prove it beyond reasonable doubt that you are better. You can provide services. You can behave in a rational way. But what they are doing over there is not helping us. If the government should try as much as possible to make sure that things are done well, why would Nigerians be protesting? Why would they come out and try to tell you what they want? You've gone up. You know what it is to be a youth. You know what it is to be able to stand and be affirmed and be able to know that the youth want certain things to be done. Provide the necessary services. Provide the necessary amenities. Don't make people feel so bad for being a citizen of this country that you are.
Well, John Kennedy, thank you very much for. Thank you, John Kennedy. Thank you. Thank you very much, John Kennedy. John Kennedy, thank you very much for sharing your thoughts there. I can see how emotional you are. We are also emotional to that. Thank you very much. John Kennedy is a managing partner at Bespoke Business Consulting in Accra, Ghana. And the International Monetary Fund says despite an uncertain outlook, the potential of sub-Saharan Africa and the resourcefulness of its people remain clear. According to the IMF, now is the time for lasting transformational reforms as policymakers in sub-Saharan Africa face the added challenge of rekindling their economies with fewer resources and more difficult choices. The fund notes that fostering better transparency and governance to improve trust in rule of law, strengthen business conditions, and encourage external support will be a key element for developing a better future. And Zimbabwe's economy is expected to rebound next year and grow 4.2% from a decline of 10.2% projected for 2020. According to the International Monetary Fund, Zimbabwe's annualized consumer inflation, which it puts at 255% for 2019, will close at 622% this year, but fall drastically to 3.7% in 2021. Meanwhile, Zimbabwe's Treasury said last week it had ticked all the boxes of targeted reforms under the TSP 2018 to 2020, laying a solid foundation for sustained growth of at least 5% annually until 2030. And Rwanda's President Paul Kagame has called on the African Union Commission and African Union member states to accelerate consultations on aspects of the reforms process, such as division of labor. The president, who was speaking during the Second African Union mid-year coordination meeting, notes that while there have been several progress reports on the reforms process since 2018, it's time to complete the process and commence implementation. According to him, Africa cannot afford to continue with business as usual. The process to redefine the Africa-Europe or Africa-Asia, Africa-China or Africa-Russia relationship is one example among other areas of the world that starts at the regional level and builds to the continent as a whole. And that's it on the program for today and, of course, for the week. Thank you for watching. I'm Chimezie Obi Iwagu.